our webinar, We Got This WA. Today, we are going to be looking at the updated guidance related to PPP forgiveness. It's hot off the presses, so this will be a great conversation. Before we get started, just a few logistics and details to walk through here. First of all, I wanted to just give a special thank you to the Seattle Metropolitan Chamber of Commerce, who has been putting these webinars on, curating the content, and working with all of the speakers. The Chamber serves about 2,600 members, most of which are small businesses, and really are leading the way in tangible resources for the business community. And the Business Health Trust. So I'm the executive director for the Business Health Trust, and we offer health insurance for small businesses through the Chamber program. A few webinar logistics right now. If you need help during the webinar, please use the chat box. So if you're having difficulty with audio or those sorts of things, and we'll do our best to assist you. You can see on the screen that circle is the chat box, and then it will pop up the window that will show your comments. If you have questions for our speakers, which we'll try and get to questions today, but I do think we'll have so much content that we'll probably not be able to get to all of them. But please use the Q&A box, as you can see on your screen. That way we can manage the questions in a much easier way. We also will have a recording of this event after this event, and it will be on the Chamber event page. So you can go to the Seattle Metropolitan Chamber of Commerce, go to the events area, and you can re-watch and listen to this recording as well as all of the series so far that we have been doing. And I wanted to take a minute. We've been doing an innovation moment. I'm really excited about this. This is hot off the presses. This is not announced yet, so you are the first people to hear about this program. So Business Health Trust and the Chamber have been talking with our members, our small business members, and we've really heard that getting PPE, getting specifically face coverings, is really difficult, and it's a cost for businesses. Businesses have a lot of costs to reopen, and last week we got on that challenge. We partnered with local companies, local resources, and sponsors, and engaged in a fundraising campaign in order to provide no-cost face coverings and masks and options to small businesses. So Lee just dropped in the chat a link, and you can go there and go and order at no cost masks or face coverings. So we have cloth face coverings, we have KN95, and then some respirator masks as well, all at no cost for the masks to small businesses. We've partnered with local companies across the state in order to make this possible. So I really encourage you after this webinar to go check that out and take advantage of this resource. It's a really wonderful, tangible way that the Chamber and the Trust are able to serve small businesses statewide. So with that, I would love to introduce our speakers and invite them to turn their videos on. So we have two folks with us today. We have Sarah Ames from David Wright for Maine and Aaron Strusser from Bank of America. Welcome, both of you. Thank you for joining us. Are you guys,
Good morning.
There?
Thanks for having us.
Aaron, good morning. Aaron, your video looks like it might be frozen, but we can hear you, which is great. So
okay.
As we're going to look, so as we get started, I wanted to just give the caveat to everyone that, none of this presentation is intended to give legal advice or financial advice, but to give context, understanding, and examples to help people really just understand some of the tough questions that are arising out of this. And again, as we go through this presentation, I just remind folks, please use the Q&A panel to ask questions, and we will get to as many of them as we can, but we very much anticipate that as we've done in the past, we might just have a separate webinar where we go through Q&As later. I wanted to start off with just the spirit of PPP. And as a reminder, PPP was intended to keep people paid at their normal wages, keep people's benefits intact, and literally keep the lights on. It was not intended to pay owners or highly compensated people more or to pay down debt of the business. And as we've had our webinars, we continue to encourage people to go back to the spirit of PPP because there will be some unknowns and some things that we're still navigating all together right now. And you'll hear that a bit from both Sarah and Aaron as we walk through things. So the SBA and Treasury finally put out some guidance, which is great. It's also still leaves some questions, but I wanted to start just with the question of, what hasn't changed a whole lot? Aaron, could you talk us through, talk to us about payroll costs as a starting point?
Yeah, absolutely. Thank you. So as the title of the slide suggests, there really hasn't been a lot that's changed since the information on the PPP came out over a month and a half ago now, that we've been working on getting businesses back open, getting employees paid. Really not much has changed in terms of how we calculate the cash compensation that the loan amounts are based off of. It's still based off total gross salary, wages, tips, commissions, paid leaves. Depending on the way that you pay your employees, much of this information is very easily found through things like your unemployment tax, payroll filings. If you utilize a PEO provider for your employee base, your PEO has likely provided you with a letter explaining how they calculate it and the fact that they file those 940s for you, so they will provide you with that information. And a total cash compensation is still limited to $15,385 per individual employee. So not a big difference from where we were at just 6 weeks ago when we started.
Great. So one of the big things that there were big questions around is the periods, paid or incurred, around payroll costs and when payroll periods fall. Sarah, could you walk us through what the guidance tells us around these issues? And, the guidance also mentions this alternative payroll period. So what is that? Talk to us about that a little bit.
Yeah, sure, no problem. So as you noted, the guidance that just came out, which is really the instructions that accompany the forgiveness form. So if you're looking for FAQs on point on the SBA's website, we don't have those yet. We're hopeful to get them, but right now your best source of information is to go to the forgiveness application that's online and then look at the extensive definitions that are attached to that. That's where you see this alternative payroll period. And that's a recognition of the fact that these PPP loans are hitting people's accounts on all different dates, often most likely not coincidentally coinciding with the beginning of the payroll period, right? And so the alternative payroll period allows for a business to begin counting their 8-week period on the first day of the next payroll, provided, and this is a pretty big caveat, provided payroll is every 2 weeks or more frequently, which for many employers, realistically, they pay twice a month. So currently, the way alternative payroll period is defined, it does not include those, or it does not allow for the use of the alternative payroll period if you are paying twice a month or monthly. However, keep in mind, this is the first application. There may be other iterations of it. There may be revisions, especially if there's pushback. And as we were looking through this when it was released internally at my law firm, this was something we noticed right away as an area that we expect pushback on, and expanding the payroll periods that could be included for the alternative payroll period. Now that's the question of when does your 56 days, when your 8 weeks start getting measured. It's either the date the money hits the account or it's this alternate payroll period if you qualify for it. The second part of this, which is above it on the slide, is the paid versus incurred. And this is probably the stickiest point from my perspective. I'm an employment attorney, so I'm very focused on these specific questions. But how you look at when payroll is incurred versus when it's actually paid, as anyone who's paying payroll knows, there's a lag. There has to be for your hourly workers. That's how you calculate overtime, is using that lag. So the SBA has attempted to rectify this issue in the definition of compensation, referring to amounts that are either incurred during the period or paid during that period. The issue is going to be that there's some contradiction with the way the act itself is written and was written by Congress, which does state it has to be paid and incurred. So we see the SBA trying to remedy that. And then the question is just going to be, are they allowed to do so? Does this remedy that they've enacted in the forgiveness application, will that stick? Will Congress allow it to stick? Because it's possible to read it as contradicting the act itself. So that's a long explanation. I hope that helps.
Yeah, so I'm not an employment attorney, so I'm going to try and repeat back what I think I understand. So, you have a payroll, you get your loan on the 29th of April, and your normal payroll is on the 30th of April. So in the forgiveness application, it seems to suggest that because that was paid during your 8-week period, that would be forgivable. However, the act itself is what leaves some lack of clarity, because the act itself says paid and incurred. So really you have the application that is providing some guidance or information, and the act that seems to contradict that. So that's kind of where that tension is?
Yeah, that's exactly right. And that's, that is, I think the important thing to keep in mind is that's getting in the weeds. If anything, that's just flagging that there may be more back and forth on this down the road. Right now, we have an application. The application, I agree, it indicates that you can use that payroll that covers a period of time from before the loan was dispersed. You can use that for your forgiveness calculation. And so I would rely on that for the time being. It's just possible that there may be changes made to that.
Great. That's, to me, as I read through the forgiveness application, it seemed to be more clear, but again, you have that inherent contradiction of it. So it'll be interesting. Erin, we were talking a little bit about this at the beginning, the three of us, and, you had indicated that as, Bank of America starts to work through these issues that, you guys will have to be dealing with this all too. Do you have anything to add kind of to this particular conversation around the paid and incurred, or thoughts around that?
Yeah, I would say that for anybody listening, it's a great idea to be able to get the guidance directly from your financial institution as to how it will be measured and what is going to be specifically requested in terms of requesting the forgiveness. Back to the beginning of the conversation, when we think about the spirit of the program, it's really about ensuring that we can help our business owners not only bring their payroll back up, but pay some of those expenses that help keep the lights on as well. And I think that different lenders will handle it in a different way in terms of what's going to be asked to be provided and what time period it's going to be watched for. But truly, there is a lot of good faith that goes into the PPP program. So while I certainly couldn't speculate on the final totality of the SBA regulating how closely your days align to when you receive the loan to when you incur those expenses, you have to consider that at the core of the spirit of the program, we want to make sure that people are getting their lights back on, getting their employees paid, and working with your financial institution is really going to be the best way to be able to ensure that you're following the rules as it's being interpreted by the lender that you received your loan from.
Right. So again, going back to that spirit of the PPP, having good faith and, trying to make good, sound business decisions with as much information as we have. So Sarah, I have a question, kind of going back to what's included in gross payroll. When we did a previous webinar, one of the questions out there was, can tips and commissions be estimated? What is your take on kind of estimating these things, particularly if, a restaurant is closed and they're providing paid leave and such? I'd love your thoughts around this.
Well, I think that's a really interesting question, and candidly, and I hate to put you on the spot here, Erin, but I would love the banker's understanding of that, because I think From my perspective, the way that the application is written, it looks at gross tips and gross commissions. So that's going to be actual amounts received. Now you could make up for the lack of tips and commissions in other sources of compensation if you're trying to get your total comp to equal out. But as written, the question is, it's looking backwards and it's looking at gross received. So I don't believe that as written it allows for estimates, but again, I'll defer to Aaron if he has a different understanding.
Yeah, well, and you know, candidly, I was hoping I was going to hear the answer from you, because I think this is one of those areas where you're right. There certainly is things that are open to interpretation. So while I can't speak for every financial institution, what I can say is that you know, your estimation of being gross wages, trackable through some sort of form that is filed in terms of whether it's a quarterly 941 payment that shows the wages that are paid. Really, as far as the way that Bank of America is interpreting that, it's that top line wages number that is showing up on your 941, your 940 that shows for the wages that are paid out, and your loan amount is determined based on the numbers seen there. So estimations really don't go that far, and certainly not as far as the actual forms that your calculations are being based off of. But again, I think the best course of action is to speak with your financial institution to determine how they're interpreting that. But in most cases, from the people I've spoken to in various other financial institutions in the industry, they're going off what's actually being reported on paper, which is in most cases a hard number rather than an estimate.
Great. Well, you know, let's turn to non-payroll costs for a little, kind of that next section. You know, we have the cash compensation that is capped at the $15,385 under payroll, part of that 75%, and then healthcare costs, 401k contribution, those sorts of things that are benefits that are not subject to that $15,384 total. And then that next big chunk is that non-payroll cost. So talk to us at a high level of what the eligible costs are.
Yeah, absolutely. And this is where that extra 25% above your, oh, yep, can you hear me?
Yes, I can.
All right. Okay, so this is where that extra 25% comes in to be able to provide for some of those non-payroll costs that also go into keeping the lights on. So just as previously communicated at the beginning of the Paycheck Protection Program, your mortgage obligations related to the interest that you're paying on your mortgage, your rent obligations to continue to keep your business open and working, or rather keep you in your lease and keep you current on your lease, even if your doors can't be open through your local regulations, and utility payments as well. So kind of the basis of keeping the roof over your business's head and keeping the lights on, literally, whether you are there or not, those are some of the expenses that are allowed to be covered during that time period. Now, just as we were talking about before around were they paid or incurred in that time period, really what we're looking for is, that those non-payroll costs are paid and incurred in a time period during those 8 weeks that you're covered for. So that means that if you received your utility bill, if you received your mortgage, your mortgage statement, your rent invoice, and you paid it within that time period, you may be asked by your financial institution to validate with receipts, with paid invoices, to show that those expenses were incurred and paid within the period that was covered.
Great. So again, kind of that paid versus incurred. So does this mean that if rent was late, you didn't pay March rent and you pay it in April during the covered period, would that be eligible? And what about prepayments of rent? You can tell the accountant in me is loving the conversation between cash accounting and accrual accounting and which way to go. So, Aaron, what are your thoughts on these two questions?
So I would defer to Sarah on this one. I think she's probably going to be better equipped to answer this one.
I would defer to the bank. So I think, and again, this is where I think you have competing interests or thoughts about how to best evaluate these questions, right? There's, as Erin referenced earlier, there's the spirit of PPP, and there's what is PPP designed to do, and you always have to keep that in mind. But then you also, as I say every day, it might, you know, words have meaning, and if you look at the word, if you look at the application for forgiveness itself, the reference is to, when it comes to rent forgiveness, is, or including rent, is whether there was a lease that was in effect as of February 15th, and if this is a payment owed under that lease. So whereas it's the logic perhaps of late payments being included in this is questionable, I might state. It appears from the plain language of the forgiveness application that that may be an interpretation that's allowed. Was that equivocal enough for you? I know, wasn't a clear answer. But you know, Erin, I don't know if you disagree with that. I'd be interested to hear. But I think, you know, to summarize it, that if you are paying your rent obligations for past rent that is overdue at this point, I don't see anything in the forgiveness application that prevents you from including that. Where there's a limit on payments outside the covered period is prepaying. So the prepayment, you can't prepay into the future indefinitely. You have to pay just for the amount that is incurred, and you have to pay it by the time that it's due, even if you're paying that outside the covered period. But if you have several months of accrued late rent, I think you can include them.
Great. So on that first question, can that late rent possibly, quite possibly include that if paid during the period, but not on the prepayment side? So another kind of more technical question for you, Sarah, is, you know, one of the things called out here in utility payments is transportation. What does that mean? Is that mileage of people? Is that gas of cars? Is that a transportation benefit, like a bus pass for people? It's under utilities, so I'm thinking it's not a benefit, but talk to us about what that might mean.
Oh, well, that, I mean, I think that to fully understand that, you're just going to have to go back to the language of the application itself. And I don't have it in front of me, but I could pull it up and look at how transportation is defined in itself. But if I can put a pin in that for just a second, there's one piece of cash compensation that I think we should clarify because it's a potentially large payment that could theoretically be included, and that's your FFCRA payments. So there was a note that you're not allowed to include any sums that are covered as Families First leave. That is true only to the extent you take a tax credit for them. So in other words, it is out of your control if you have employees who are eligible for and taking protected leave, which remember they have up to 14 weeks of. If you have less than 500 employees, those amounts are not automatically deducted from cash compensation. It's only if you take that tax credit. I know it's off topic, but since it came up earlier, I wanted to note it because it can actually have a pretty significant financial impact. And all you need to do is think, is it more valuable for you to include it to get to the 75% threshold? So include it in your PPP, or do you want that tax credit through Families First?
Okay.
But as to transportation, which was your other question, you know, I candidly, I don't know the answer offhand, how transportation is going to be calculated.
Yeah, it's an interesting word for me for them to have thrown in, and I've seen it a couple times, but, you know, utility payments I think of as, you know, gas for, you know, your house or your office, telephone, internet, you know, your actual internet bill. So not your Microsoft 365 cloud account, but actual internet service coming to your house, those sorts of things, electricity. So I've very much just been wondering, what is that word and what does it really mean? So it sounds like people don't know a ton about it. You know, I've heard people say, you know, is it for fishing vessels, the fuel, or delivery trucks, the fuel and such. So maybe they will clarify that, but I think somebody should crack that nut and let us all know what the answer is. So let's move to FTEs. One of the outstanding questions earlier when guidance was issued for first applying was, okay, what is an FTE? So Aaron, walk us through what the application talks about for what an FTE is and how you calculate that.
Yeah, so an FTE is it's a full-time equivalency or full-time employee during the covered period. Really what that means is if you take the average number of hours worked and divide it by 40 and round to the nearest 10th, that's where you get that FTE number. So, you know, what we're utilizing is a 40-hour work week baseline to determine what your total FTE is. So if you have 2 employees that average 20 hours a week, you have 1 FTE. And then if you additionally have 1 employee who works 40 hours a week, you have 1 FTE. So it's basically, it's a very simplified calculation that just utilizes a 40-hour work week to calculate how many employees you have, or how many FTE you have, apologize.
Great. And the loan application also talks about a simplified method. Sarah, could you talk to us about this simplified method and what that looks like?
Sure. So as Aaron noted, the FTE calculation rounds to the nearest 10. So you can be a 0.9, a 0.8 FTE, for example. That we see that frequently with employees. But that can lead to a little more complicated to calculate it, right? And so your other option when you are determining your FTE count, and you can pick which option you want as long as you apply it consistently, but your other option is to just say if a person is full-time, 40 hours or more a week, they're a 1.0, everybody else is a 0.5. And so depending upon how your hours are dispersed, one of those 2 methods is likely going to be more beneficial to you, or perhaps a better way to put it is one of them is going to result in a higher FTE count. Now, you have to compare apples to apples when you're comparing FTEs on June 30th to your earlier covered period. So at the end of the day, whichever method you pick, that's the method that you'll be using throughout this process to determine forgiveness.
Okay, and so you choose one of these methods. And is it your FTE count during the covered period, or is it your FTE count at the end of June that you're looking at?
Well, in different parts of the application, you're looking at different FTE counts. You know, there is a question about your FTE count on June 30th, and that's the reduction quotient that I think we'll get to in a little bit, and everybody's been really focused on that. Because it's kind of a black box. But that is your FTE count on that specific date. But there's also measuring FTE counts that you have to calculate for referenced time periods that you're comparing that to.
Right. And talk to us about overtime. So if someone is using the FTE, that first method on the screen there, and people are working overtime, they're hourly workers, do overtime hours need to be backed out so it's a max of 40 per employee, or how does that work?
The way I would think about it is it's less a matter of backing them out. There's just a cap of a 1.0 per employee. So if somebody's working 50 hours in a week, it's their 10 hours of overtime, then it would be technically the equation would be 50 divided by 40, but the answer, the FTE number is capped at 1. So I suppose practically speaking, yes, you're not counting overtime hours.
Okay, and so I could see this running into issues where, you know, there are fewer people working for whatever reason, and, you know, there's more hours being incurred. But previously, you know, there were 2 employees, and now there's one that's maybe doing 1.5 times job. So that'll be an interesting one to see how that's navigated in the calculation, because I think that might be happening quite a bit. Another question for you is, you know, are there exceptions to the FTE calculations? Specifically, talk to us about safe harbor, and we'll start to talk about that. You mentioned the calculation.
Yeah, so if I understand this correctly, it's are there exceptions to the expectation that FTEs on June 30th be returned to essentially pre-COVID levels, to February 15th levels, right? So what are the exceptions to getting back to full FTE by June 30th? Is that a fair way to understand the question? Okay. So yes, There are a few, thankfully. The first is, and this is something that we have seen repeatedly, I have seen repeatedly in my work advising companies on employment issues that are arising. Not all employees want to return. There are employees who don't feel safe returning. There are employees who don't feel like it's in their financial interest necessarily to return. There are employees who have a variety of reasons. They don't want to come back to work when offered reinstatement under PPP, or pursuant to the PPP loan. So in that case, there will be an exception made for those employees, and you can still count them at their previous FTE when you're hoping and trying to get to full time. You still count them as long as you made a good faith written offer of reinstatement that they refused. You know, now what that means is I think more information is needed. Where I've seen a lot of questions coming up are, well, what if we make a good faith offer to reinstate them on June 29th and then let them go on July 2nd and they refuse? As you can imagine, some might, because they don't want to return for 3 days and have that possibly impact unemployment. Will that be enough to satisfy this requirement for FTE? And the answer is we don't know. The question will be, is that good faith? Is that really a good faith offer of reinstatement if you are making it for 3 days solely for the purposes of PPP forgiveness? So that's a big question mark. And then otherwise, you know, there are, if an employee is let go for cause, this is not an excuse, or PPP doesn't provide cover for employees to just stop performing and keep their jobs. If there's a reason to let them go, you can still let them go for cause and count them as an FTE. Or if they resign or ask to have their hours reduced. So if it initiates with the employee, they refuse the offer, they resign, or they ask to have an hours reduction, then you count their PP, or you count their FTE in your calculation for June 30th, or if they're fired for cause. Those would be the reasons that you would count them.
Okay, and I do want to point out, so we've referenced the application a couple times in this conversation, and we're actually going to now take a look at the application itself and talk through a few of these things and a few other questions. I do encourage folks, if you have not looked at that application yet, a lot of the text that is in this presentation actually is copied and pasted from that. The application does provide a good amount of help, which is really good. And then, you know, working with your lender as you walk through the process for the rest. Before we move on, I just wanted to ask a couple questions around payroll and non-payroll costs. So Sarah, if a company reimburses for personal health insurance costs, like a stipend on a regular basis, would that be considered cash compensation or a benefit?
Well, for the purposes of determining your payroll costs, any medical, dental, that includes vision, can be included. So I think that the question of whether it's being paid to the employee or being paid, or, you know, directly, the benefit is being provided to the employee, I think it's splitting hairs a little bit unnecessarily for determining total comp. Either way, it's a medical benefit.
And so if that was paid directly to the employee, you know, $400 a month, so they then pay their own health insurance, that would be cash compensation and included in that $15,384 cap. Is that correct?
Sorry, I misunderstood your question. I was thinking about getting
no problem.
I was thinking about getting to the payroll threshold itself. That's an interesting question. I don't know the answer offhand, although I think you actually may be better positioned to answer it given your background. But my understanding is that if that would be for benefits, it's not its own cash compensation. So it's not. I wouldn't. My knee-jerk reaction is that wouldn't get factored in, but I wouldn't rely on my understanding of it. I'm not a benefits attorney.
Yeah, I would want a benefits attorney as well. You know, I think my background as a CPA, I would think about it in that same, like, what is taxed to the employee tips, bonuses, wages, commissions, those sorts of things. And in a lot of cases, a medical stipend might not be. It depends on how your employer does that. So I think that would be at least my take on it. So going to some
if I can jump in too,
yeah.
at least just going off the experience that I have, I would say, again, it's probably going to be my answer for a lot of these, but check with your financial institution to see how they look at it, because one of the common missteps that has been seen on applications is that employers are providing things like stipends as a part of their cash compensation. But the problem is it's not verifiable necessarily without supporting documents to be able to show that. And so the loan amount is determined based off of your wages payments to your employees. And if you are adding in numbers that don't match to the documents that you may be filing, like a 940 for your unemployment tax payments, then there's going to be a discrepancy there, and that may raise some red flags on your application that may result in a different amount for the approval or the forgiveness. So I would always connect first with your financial institution. Personally, the way that we've been working through those at Bank of America is that we consider that to be in the benefits category, which goes in addition to those salaries and wages.
Okay. Yeah, I think having a good relationship with your banker is really coming to the forefront of importance in these days, for sure. So Erin, a question for you. What are you guys seeing around, a lot of people are working from home, and so internet access and those costs, companies are paying that for their employees. Is that something that can be included as either a benefit or as a utility cost under allowable expenses?
Yeah, I would consider it as a utility cost under the allowable expenses if that's something where they are paying the internet cost, or again, going back to the same spirit of the application of providing a stipend as a medical benefit, provided as if they're paying for the payroll cost, or providing a stipend for internet or phone for home use, it would really go into the benefits category versus cash compensation.
Great. And also, just going into the nuances of benefits, short-term disability, long-term disability, life insurance, those sorts of things also included in benefits. Is that correct?
That is my understanding. But again, check with your financial institution that you're doing your application with to see how they're interpreting that.
Great. So we're going to change now and take a look at the loan application itself. I'm really looking for, you, Erin, you have looked at a lot of applications. You've talked with a lot of employers. I'd love your thoughts on common missteps. We won't go into all of the details, but our hope is that we can provide folks watching today little snippets and a little explanation around some of the areas of the application. And just a reminder that the application itself has guidance and definitions in it as well, so that business owners and operators can try and be looking through that themselves as well and connecting with their financial institutions. So, my first question is, we have this application. What schedules and forms are required to complete, to submit to the lender, or to just do for yourself and retain? Erin.
Yeah, so I will go back to my stock answer first, which is check with your financial institution before you do anything, because many financial institutions are processing or are still working on their process for rolling out the forgiveness. And as we saw with the application process, every financial institution handled it in different ways. Most determined an electronic way to be able to process applications. Some actually utilized paper formats from the SBA. So while the SBA has actually gotten the forms and the guidance out on forgiveness, that doesn't necessarily mean that every financial institution has translated that into the format that's going to work best for their clients. So to avoid double work, or to avoid providing more than what's needed, always connect with your financial institution first. And most financial institutions within the next week or so are going to be sending out information to their clients. I know specifically Bank of America will be emailing every single client that has a PPP loan with us within the next week here with instructions on how to apply for the forgiveness component of the loan. Now, as far as documents required and common pitfalls, what I would say is the first common pitfall that is most commonly seen is just missing the calculations that are maybe asked for in the applications. leaving sections blank. And in some cases, if there's yes, no sections to the application that you're providing, being very, very careful. I mean, this is a document that we are utilizing to first secure funding that is guaranteed by the federal government through the SBA and the Treasury, and now asking for forgiveness for it. So the accuracy of the forms is so very important. Unfortunately, there's been a lot of scenarios where clients maybe answered a question yes because they were going down the line and saying yes to every question on the form. And one of the yes questions they answered was that they're currently under federal investigation for an indictment or perjury or something along those lines. So you've got to be very careful around the questions that you're answering. Again, also the calculations that you're utilizing and understanding the rules and the guidelines of the program. A common misstep was that 1099 contracted labor is eligible to apply for PPP themselves directly for the program through their financial institution by providing their 1099 miscellaneous as well as their Schedule C. And so some employers who employ contracted labor were including those contractors in their employee calculations, and unfortunately found out that those numbers didn't quite match up in terms of what they were eligible for because they weren't eligible to claim those contracted employees. So those are some of the common missteps that we've seen in some applications. In some cases, just simple clerical errors, math errors, numbers being miscalculated incorrectly. So just always double check your work, take the extra time, especially around forgiveness. We're gonna have plenty of time to be able to get these in. I understand there's an 8-week window here, but work with your financial institution, find out first how they want to be able to collect that information from you. As far as the forms on the screen here, you can see a lot of them either say complete and submit to lender or complete and retain only. The worksheets are really there just to help you determine what amount you're eligible for. But always just go to your financial institution first and find out what forms they're looking for and how they best want you to submit them to them.
Great. So the first part of, on here is, the loan forgiveness calculation form. And the second is the representations. Can you talk to us about, generally at a high level, like what is being asked as those representations?
Sure, absolutely, yeah. So the representations it's really it's where you're making an attestation that the information that you're providing is true and accurate. Again, back to the fact that there is a lot of goodwill in the spirit of the program to ensure that our economy is able to get back on its feet. Our small businesses are able to get back on their feet. The ask is that you are providing accurate representation of the dollar amounts requested, their purpose, the fact that they were used, and ensuring that everything is in line with the spirit of the program in terms of what you're utilizing those funds for and how quickly you do things like bringing your payroll back up and covering some of those other expenses that are allowed for in that time period. You're also representing that you are submitting all documents required to your lender to be able to help them make those determinations, as well as the fact that you're taking responsibility that the information you are providing is true and accurate, and that you understand that you will be held responsible from a federal level for any kind of fraud that is committed in the act of trying to obtain either the PPP loan itself or the forgiveness on the back end.
And can I just chime in there, because I have been getting so many questions around that good faith requirement and the safe harbor that this was, I think, last week or perhaps this Monday. So when we're advising clients, this just goes right in line with what Erin was saying. The important thing, you are making that good faith effort to be honest and accurate at the time you sign the attestation. So the fact that you 2 weeks later receive a generous donation, this has come up primarily in my experience with nonprofits, that you receive a generous donation, or that if you are a for-profit business, your sales didn't fall off the way you anticipated, that is not going to be held against you. It's not, there's not an expectation that you can see into the future and that your prediction of financial need is correct the day you sign the attestation. The question is just, given the circumstances on that day, is what you said accurate and reasonable?
That's a really important clarification. Thank you for letting, for chiming in there. I've heard that a lot as well. I wish we all had a crystal ball. That would actually be very helpful. I think it would also help us determine what transportation really means in that, that one section that we were talking about. Erin, I'm also interested in what sort of documents folks should be maintaining, and then are they submitting those documents? I know it will vary by lender, but talk to us about what Bank of America's thoughts are so far, knowing that it might change.
Yeah, and again, it is going to vary by lender as far as what's going to be provided. As far as right now, until you get that guidance from your lender and what they're going to ask you for, I would say any documentation that you have that is going to validate the claim that you're going to make, whether you need to submit it or not. Worst case scenario, you have it on file, you didn't need to submit it, but in your heart of hearts that you've submitted the right documents and the right request for the forgiveness on the loan. Best case, you've got it all ready to go and lined up to be able to submit if your lender actually asks for it. But basically, the documents that you're going to want to be able to provide have to do with your payroll records, being able to show was your payroll impacted. It was basically from February 15th, and now have you recovered it to pre-February 15th levels, pre-COVID-19 levels? In regards to, as we talked about earlier, things like mortgage payments, rent payments, utility payments. Do you have those invoices paid that shows when they were incurred and when they were paid afterwards? And do you have any kind of documentation that's going to help justify that claim around the safe harbor expectations around FTE reductions? And to Sarah's points earlier around some of those, the guidance that we're getting on employees that need to be let go for one reason or another, or employees that say that they don't want to return. The more documentation you can have at your fingertips, the better. But always check with your financial institution before you upload everything. But because what I can say from personal experience is, for the people that are reviewing those documents, it becomes very difficult to navigate through everything when somebody is uploading more than is requested. And it makes it harder to see the things that are actually required to be able to make those determinations as far as where that eligibility lies. So the easier you can make it for your financial institution, for the various people that are going to be helping to underwrite the loans or write back the forgiveness, as well as the SBA, the easier it is going to be and the quicker likely it's going to be for you to be able to complete the process accurately.
Yeah, earlier in one of our other PPP webinars, a point that we made a lot was make it easy on your lender. So, go through that process. On the slide right now, this is from the application itself and the definitions in there. But, my background is as an auditor. So the way I would approach this as a business person would, okay, I'm going through these worksheets, I'm going through the application. Where did I pull those numbers for? Making sure that I have those documents, but not inundating the bank with all of those. So providing what the bank says, okay, I need these 10 items, provide those 10 items, but know that I do have that rent invoice. I have those receipts. I know I have confidence in the number I'm giving because I have that backup for it. And if the banks are needing that, then, we have it readily available. Is that a good approach with kind of what I'm going down for that line of thinking?
Yep, you are spot on. Absolutely.
Great. So, Sarah, let's talk a little bit about, the forgiveness calculation. I have a couple questions in here. I wanted to just show folks, this is the actual forgiveness calculation form broken up into a few slides here. So you can see we have the payroll and non-payroll costs that we've talked about, and then these adjustments for the full-time equivalencies. Let's talk about that kind of line 5, 6, and 7 around the FTEs. I'm getting a lot of questions in the chat box around how do, if someone was on paid leave, how do I count those? Do I adjust for those? What about, so, maybe start with that question.
Sure. So, that goes to what I was commenting on earlier with, or it's related to that family first comment. Your FTEs, that includes paid time off, unless you're getting that tax credit for them. And actually, I think I saw your smile just freeze, and I think that's because you're thinking that only impacts the compensation, not the FTE count.
I'm just agreeing. Yeah.
So, and I think actually that may be the case. I'd have to go back and look at it. But generally speaking, your FTE calculation, it's going to include people who are on leaves as well. There's a worksheet. So this application is it's great to start here because this gives you the overview of the information that you need to collect and what the questions are in the order that they flow in. So you start with your total payroll costs, the lease amount, the utilities, et cetera, add that up. And then there's certain reductions that are applied based on if that FTE number, if you have to apply the reduction quotient because your June 30th number isn't where it should be. And then also if there's been a salary or wage reduction over 25%, then there might be further reductions to your total compensation that you've added up in lines 1 through 4. And then when you're looking at, and one question I've seen popping up repeatedly is, well, what's the most that can be forgiven, or some iteration of that? That's where you look at lines 8, 9, and 10. And there are 3 different calculations. 9 is particularly easy. That's just the amount of the loan. 10 is where the 75% threshold comes in. And then 8 is your modified total. So your total amount of payments that count, that would be the payroll, the mortgage, the rent, and the utility. Those as needed to be reduced because you're not at your FTE or you've done a salary reduction. You compare that number to the 75% of total payroll cost, and also compare it to the PPP loan. Whichever of those 3 is the lowest, that's your forgiveness amount.
Yeah, I think that this is important to just highlight real quick for people because, you know, I've heard some people say, well, as long as my payroll is 75%, I'm fine. And there really is those tests that you have to do because, you know, an example would be that, you know, 2 business owners just pay themselves the whole loan, you know, $15,000 each, and, you know, terminate the rest of the employees. Well, that's why that FTE is in there. You know, SBA is wanting to maintain, you know, payroll levels, maintain head counts, as is kind of going back to that spirit. So the FTE and then the wage reductions, looking at those are both tests that people need to keep in mind as they're moving through. So we have just a few minutes left, so I'm going to move through the rest of these slides a little quickly and just highlight a few questions that we might have. So you can see this is the PPP Schedule A on the screen. So this is one of the schedules that you then are walking through and bringing back to that forgiveness calculation. There are also 2 tables referenced here, so Table 1 and Table 2. And these are, again, support that people can fill out, but that might not necessarily need to upload these specific tables to the lender. So again, going back to Erin's comments of making sure that you're providing what they're asking and using these tools to make those calculations and carry them to the application. So here's Schedule A, which looks at employees' schedule, and then Table 2, some more information on employees who are annualized over $100,000 for any time in 2019. On the application, I did have a specific question that I've heard a few times is compensation to owners. So line 9, Sarah, is there a dollar threshold of, you know, what is considered an owner? You know, a minority owner or someone that owns 6%. Talk to us about how people should think through that.
Well, the question is really, are they comp like an employee? And so then you have the thresholds, the per employee thresholds that we've already discussed. But when owner comp can be factored in and utilized is when you have set it up so your owners are treated as if they were employees. That's really what you want to look at.
So if someone does own, you know, 6% and is an employee, you would list them as owner compensation. So there's not a threshold such as like 20% or, you know, other thresholds that have been referenced in different parts of the process.
Not that I'm aware of, but are you?
Yep, nope, that's it. That's what I wanted to just clarify for folks. So
I was really just looking at your employees.
Yes, great. And another one of the schedules that we've talked through is walking through the FTE reduction, that safe harbor that Sarah was talking through. And so, there's 5 steps so that you can calculate that and carry it forward to the application. And same with the full-time equivalent calculation. One thing I wanted to highlight here is that, Sarah and Aaron both mentioned the consistency, applying a consistent approach. So if you're worried about, oh, I've been thinking about FTEs differently, again, going back to you'll be using a consistent approach, which will not penalize you if you were thinking about it differently prior to. So making sure that you look at both of the methods that are available, and then being consistent there. Sarah, one question on the FTE calculation. I see here in line 11, average FTE during the borrower's chosen reference period. What is the chosen reference period?
So the chosen reference period, and this I believe would have been decided, I think you would have decided this in your application, although Aaron, you're certainly more familiar with that than I am. And it's either that period in 2019 that you use the comparable window in 2019 you use as your measuring period, or it's the first 2 months of 2020. Those are the different reference periods that apply. But as I recall, and again, as Aaron's noted multiple times, you want to talk to your banker about this, but as I recall, you have already decided what your reference period is when you're applying for the loan.
Great.
Yeah, and I think it depends on the different scenarios. So in most cases, we're using an average monthly payroll based off of the 12 months of 2019 divided by 12, and that's how you determined your monthly payroll. But for some businesses that were only open for part of the year last year, or opened up this year prior to February 15th or April 1st, or if they were seasonal is the other situation where you may find that there was a specific reference period, because seasonal employers were allowed to be able to choose basically their best 12-week period of time to be able to base their average FTE on. And so I think you're absolutely correct. It's based off of being consistent to what your reference period was that you used at the time of application.
Great. Well, we're very quickly at time, which I anticipated we would. A lot of great content. Thank you guys very much for all of your help. We will stick around just for a few minutes and answer a few of the questions in the chat box or live. So if folks need to log off, they can do that now, but we'll stick around for about 5 minutes and go through just a handful of questions right now. One thing that I know, maybe Aaron, a question for you is, do banks have any latitude on how they are interpreting guidance and such? Kind of what's the consistency being applied with SBA, or is there latitude with the banks?
Latitude in terms of our individual interpretation of the guidelines?
Yeah.
There really is not a lot. It's pretty straightforward. We utilize everything that comes directly from the SBA. It all goes through our legal risk and review team to ensure that it's in line. Keeping in mind the final rule book was updated hours before PPP was supposed to launch on April 3rd. So and in some cases it was updated in the middle of the process between round 1 and round 2. So we've used the most recent interpretation through the most recent SBA guidelines every step of the way, but understand that applications before April 24th may have had different guidelines than applications after April 24th due to the additional funding that went into the PPP in the second round. So it's incredibly consistent across the board, because it has to be, because it's a federal application, or it's an application that's going to be going to the federal government. But that being said, when you applied may have an impact on the interpretations that were used based on what was the interpretation at that point in time.
Great.
A follow-up question as well. Sorry, can you hear me?
Yeah.
Yeah.
Okay. And Aaron, I'm curious on Viva's interpretation of this. Someone asked a question in the Q&A that about whether or not you have to wait until July to apply for forgiveness, because there are questions about status as of June 30th. And I mean, that was certainly my interpretation when I first looked at this. I thought, well, this is certainly going to slow everything down. And if anything, the SBA has bought itself another 6 weeks to come up with guidance, because no one can submit an application for forgiveness until July 1st at the absolute earliest. I mean, is that how you're interpreting it as well?
That's my current interpretation, but I mean, it's I don't think we've used the word enough, but we use it pretty daily at Bank of America. It's an incredibly fluid situation. You know, we are always looking at the latest information that comes out, in some cases hourly, which changes what we thought just yesterday. So you know, as of right now, I can only speak for Bank of America in that we are reviewing what's come out from the SBA, and that within the next week or so, all of our clients that have applied will get information on what forgiveness looks like at Bank of America. So I would, again, kind of fall back to check with your financial institution, but also be patient right now while all institutions are also trying to determine how to be able to best and most easily go about this for their clients.
Well, and if I recall, there were multiple iterations of the application for the loan to begin with. So yeah. I think it's reasonable to assume that this may not be the final word on forgiveness, on what it takes for forgiveness, et cetera. And in fact, it seems like there's about 6 weeks to continue to tweak it and respond to the concerns that are being raised.
Yeah, I would say that is an accurate estimate.
Okay. So one last question, and then we will sign off here. Telephone and employees' cell phones, similar to the internet question that we had earlier, Aaron, would those be considered benefits or eligible as non-payroll costs, or just not eligible? In your opinion?
Yeah, in my opinion, probably doesn't mean much yet, again, because it's probably going to change at some point. It may vary, but you know, not necessarily a benefit, but I would include it as utilities. So similar to phones and internet being included as utilities for the business owner, I would imagine that if they are paying that at the business level, they're going to see that bill at the business level, which means they're going to be able to validate that expense was paid by the company as a utility payment to account for that additional 25% buffer beyond the payroll expenses. So is it a payroll benefit? Not necessarily, but is it a utility? I think that it's probably open to interpretation, but talk to your financial institution and they can tell you.
Great. And go ahead, Sarah.
Sorry, just really quickly, cell phones are especially interesting because different states have different laws as far as mandatory payment for your employees to the extent you require cell phone or even home internet usage. And so you're also going to want to think about the state that the employee is housed in, and how that payment, how that cell phone or internet is treated as far as required reimbursement to the employee.
Great. Well, thank you both so much for your time. I really appreciate it. And I appreciate your insights in an ever-evolving, fluid world. As we know, things change on a daily basis. So thank you for helping us and our employers start to think through these things and giving us some guideposts of ways to be considering and questions to be asking ourselves. So thank you, everyone. As a reminder, this webinar will be available on the Seattle Metropolitan Chamber of Commerce website. And also please check out our new subsidized masks and face coverings program brought to you by the Chamber. Thank you and have a great day.